What's going on, everybody? This is going to be a longer video, so all of my veterans in the Discord, anybody that sees this for technical analysis, it might be a little bit more of a rerun for algorithms and confirmation. So I'm going to talk a little bit about computer personalities in the market and what you can see on the intraday chart with those as day trade scalpers, what algorithms that we kind of look for, and what determines extra confirmation. We're going to mix all of those together. We had some video requests, so I'm going to get into those video requests. If you want me to do a video on anything you may be struggling with or you might not understand from the channel, please drop it in the comments and I will get to that for sure. Now, confirmation and algorithms. Now, to talk about confirmation and algorithms together, we're just going to go over a bunch of examples, essentially what we see fit for shying. And the last couple of days has a lot of good examples. So computers, think of it as completion. They like to complete certain things. There is no time frame for this completion, but there is other indicators we are going to stack for catalysts, which is going to fall under confirmation, that we may be able to help time and at least rationalize what the market's going to do with those primo timings. Okay. So we're just going to do some examples here. 1 minute, 5 minute charts. Let's see what the difference is actually right here on the 1 and 5 for the open. It should be the same. Yeah. Okay. Perfect. So algorithms love to complete things. There's a couple different styles of algorithms, but I'm going to talk about the shying algorithms and things that have potentials to come back. Okay, there's no such thing as a guarantee in the market. If there was an indicator that worked 24/7, if there was an alert service that worked 24/7, everybody would know about it. Everybody would be in the chat. Don't be ridiculous. There's not one little tiny thing that works all the time, but we can gain an edge. And that's what we're going to try to, not even try, we're going to do today. We're going to teach the personality of how to find these edges and how these algorithms think. So completion, okay? Algos love to complete things. So moving averages is what we're looking at right now on the 1 minute chart. We're going to have to zoom in very close, and we're going to give some examples where there was no completion of something, okay? Notice the price action pushes up on the 1 minute chart and leaves a micro gap at the 100 EMA, but it hits the VWAP just fine because we love first VWAP tags. But the miss is the 100 EMA. Now, what does price action do? At the open, once missed, and that was yesterday. I don't know why auto did that. So it misses the 100 EMA on that retest and then plummets one way. Okay, so in the back of our head, there is not a completion tag to the 100 EMA. If it's not on the 1 minute, it most definitely will not be on the 5 minute. Okay, so what I like to do is you look at both charts, even though 1 minute's going to tell the story, and notice that we have no connecting hits, no completions, no tags of moving averages, right? A tag is obviously when a candlestick is going to push through the moving average like so. And this is a shy when it leaves a little bit of space before completion, right? So the shy that we had seen at the open of yesterday was a great magnet, right? So when something doesn't complete a hit, notice the 666 is not hit, the 100 EMA in the green is not hit, the 200 SMA, all no tags, okay? Well, what does that mean? We have potential to have a reversal back to those moving averages. Why? Because algorithms like to complete tags. Is it a guarantee and it has to do it every single day? Absolutely not. We could have a catalyst like hype, fear, and greed, like when Trump used to treat China. You know, he would tweet the word China in 2020. The market would go absolutely insane, right? Those hype, fear, and greed indicators are completely... They wipe out technical analysis. Any monkey can learn this stuff right here for technical analysis. Hype, fear, and greed as you enter into the day. The catalyst of psychology trumps that, okay? I'll actually touch on that a little bit at the end. So when we have the shying at the 100 EMA, the 666, the 200s, we have an availability to come back to those because there is a shy. Now, on the 1 minute chart, we're going to use this a little bit more because of how close that little algorithm tag was and it hit VWAP. So what do I do with that information? Well, sometimes they like to reverse back. So I'm going to wait for a longer time frame because we're always watching the 1s and 5s, and something like the 5 minute for me, I would start watching my oscillation indicators, the MACD and the RSI, right? So with that, I hate how this thing fully readjusts every single time. Let's look at some confirmations. We shied this, no big deal, washes out. Nothing goes in a straight line like this in the stock market without at least a bounce, right? So the MACD and RSI here, we hit a lower low in the RSI and got cooled real bad right there. And then the MAC started showing sellers stepping aside in between 837, 840 right here, where the histogram was like, okay, we might be able to close some distance coming into 845 for a cross. Let's see some longs. Okay, well, the RSI got picked right back up and we had a pretty good base set and it started ripping back. Well, what do you do with that? Well, once you see candles start to press the opposite way, right? Generally, they'll start to leave value gaps. They'll leave 1 minute, 5 minutes for you to, let's look at the 5 minute real quick here, 5 minutes to follow and remount. So where is our target going to be? At the long of the bottom here. Okay. So let's talk extra confirmation in the RSI, MACD. We have the histogram turning. We have a very cold 5 minute here and a really nice reversal candle. A reversal candle is like a fat body hammer like this. So we're going to start stacking catalyst, right? So I want to see as many bullish catalysts versus many bearish catalysts that I could possibly find against each other in terms of what's going to help me for my psychological trade and magnet and target. So I'm going to come in and say, okay, well, the histogram's going to the backside, 845, +1 for the bull side, right? And then we have the RSI coming out of a very oversold territory, a little bit of a bull side, reversal candle in the 5 minute, bull side. And we have no tags on moving averages on 1 and 5 minute, bull side, because it can create a magnet in price action, right? I'm drawing that the wrong way. So all of these moving averages up here may wait for this fancy magnet, right, to suck that price action back into moving average that it shied, completing the circuit for that algorithm. They love to do that. And that kind of confirmation is what we use to trade day in, day out for shying and magnets, right? So with all of these bullish catalysts, what are my bearish catalysts? Well, nothing goes in a straight line, so that big dump can't really be considered extra bearish to continue because there's no catalyst, right, for continuation. What's my continuation catalyst at the bottom of a huge drop dump out of the gate where histogram and everything else is showing us that we need a little bit of a retrace? Well, there is none. There's no psychological catalyst, unless you have CPI coming out right after market open, 845, when ISM and PPI and everything else usually come out. You don't have catalyst, right? So today we had zero catalyst that was going to be affecting the market hugely. So I really can't think of a continuation bear metric that this would hold on to. So a really key 5 minute candle right here. And you notice where the open closes on the body, and then we pin open that right here. This is a very, very strong reversal style candle in the 5 minute chart. But I would trade this, obviously, because it was so fast off that 1 minute. And we generally use a 10 SMA mounting system, right? And first tag. And I love algorithm first tags. They loop, they swoop, they move. There's just so many great things about them to come back up. So we have a 5 minute reversal candle that's starting to peak back up. Once price action has ran under the 10 SMA for a while, and as soon as it breaks above, there's at least a chance he will hold above it or continue, especially with speed. This has to do with speed confirmation. So if you have a ton of hard downside like this, the V has the potential to be just as strong, which you see here. If you were to have candles that were being developed right here, that were very slow, where this candle, you know, it was 1, 2, and then it would made like 3 red, and then would kind of lazily went sideways, kind of popped into the 10 SMA, broke down a little bit more, and it was making candles like this. And then it's slowly, you know, really slow and grindy. That's not going to have a pop, mount the 10 and run feel to it. That's going to have more of a pop, go over the 10 SMA and failure kind of feel to it. So speed is a really big factor here. So the shy is what tells me the magnet is going to pull the price action back up. We have tons of different reversals we talked about in the oscillation. We have entry where if we break over that 10 with strength, you buy starters, and then you buy anything into that 10 SMA to progress. Well, we have targets because the 100 EMA was never tagged at the open, so it came up and completed that cycle, okay? And algorithms run off something as well called first tagging. So something for the day that starts the day in live trading hours, not pre. It's not going to matter in pre. Live trading hour first tag is very important for the computers. A lot of the time, it creates an opposing move. Every single time price action hits something for the first time, we have a chance to reject it. This is why the Elites trading system carries something called first VWAP tag. So if you notice the price action right here that comes out, boink, first tag VWAP, launches itself down. Do they always look this clean and pretty and perfect on the VWAP? Of course not. But that is something of a metric to keep in mind that we do like to use, right? So as we scooch into the first tag of that 1 minute 100 EMA, look what happens. It pushes into it, little knee-jerk reaction, right? Little higher high scam to stop out the longs that would chase this breakout, and then reverses down. And what is the confirmation? What are we looking for? Well, what's the opposing force just besides price action that we have that's going to help us in this trade, right? Well, it's obviously the VWAP. We had already connected to it once before, so we slammed over it. And once we break over the VWAP in the purple, what do we look for? Confirmation. What's confirmation? Something implying that the trend will continue, right? Because we want continuation plays. So the first time it hits the 100 EMA, it will generally have a reverse reaction to where it's going. So if it's going long into the 100, we'll have at least a pullback. We scalp these all the time, where the first tag that price action hits, I short it, 2 to 5 points on ES, maybe 10 to 15 on NQ. We have some really good opportunities on first tags. So look at this reversal metric. It's really cool. It comes up to this 100 EMA, falls, but what it did was it broke over VWAP that we already had a rejection point from, hit a support with it. You look down, the top channel is now in the RSI. The moving averages are now in the top zero line of the MACD. It's in positive territory, not negative territory. So we have a lot of things that could make this continue on the QQQ, right? So we broke over VWAP, we confirmed the back test, and then the moving average, the mounting system, the 10 SMA. Watch my video. I'll throw it in the description. It's how to scalp with the moving averages on first tag metrics. It'll go along with this video on confirmations and algos. So it pushes over the 10, comes back, it loops the 10 SMA, pushes higher. Now what does it do? Pushes it into 200 SMA. 200 SMA first tag, right? Higher high to scam the long breakouts. Poof, back to what? Well, VWAP is already used as a confirmational support, and we broke over the 100 EMA, which we had just tagged, which we had failed to the VWAP that we had just broke over, making confirmation, which makes a higher high, which pulls back to the break of the 100 EMA, which equals more confirmation, right? And then it goes to the 666. And then the first tag of the 666 chills out, goes lower lows, pops, loops the 10 again. But where does that pull back to? Well, most likely the 200 SMA, just we don't use them that far in, okay? Yep, right back to the 200 SMA for catch support, and then washed completely. But again, the oscillation indicators were already telling you, bottom of the channel, MACD bottom, everything was already fine for continuation short there. Now, what does that mean for extra algo confirmation? Well, we give you guys a lot of interesting outside sources with confirmation and algos, right? So we just talked about magnets on the moving averages. Let's go over another bigger moving average magnet that we had seen on the SPY. And this is why I had such a conviction that the 50 SMA was going to bounce yesterday. So at the last YouTube video recap, I said it was going to come into the 50, most likely bounce around here and come back up towards orange zone, which is right here, made a video about it, and then failed from there. Perfect, right? So why did I know, or at least have a high conviction right there of the 50 SMA bouncing? That's the daily, if you're confused there. That's a 50 SMA daily coded into the intraday chart. Well, the last time we were down here at that 50 SMA, what happened? Zoom in real close for this. You missed it. This is a shy. That means the algo has not completed the circuit, right? No completion, blown fuse, okay? Not going to get through. So no connection to the 50 SMA, which means the back test of the 50 was shied, right? And then after it shied, it ran that whole next day to a false push to lower high, all the way down to the 50 we seen yesterday, and that's why we called it to do the bounce. So it slips past the 50. It has to trap shorts. Nothing goes in a straight line. So imagine, retail novice shorts seeing this, and it breaks under the 50, and they're like, oh, short. And then they obviously are going to get kicked out. Pretty relatively normal. We're at a very cold situation here. The histogram's backing off right now, where sellers are stepping aside, so on and so forth. And we had that kickback. So that is another example of the completed circuit that the algorithms love for first tags. This first tag algorithmic works on all support, all resistance, all Fibonacci, all golden pockets, all moving averages, okay? The first tag of the day. Now, generally you want to see speed or a shy, like we had seen on this day, where something shies all the moving averages, fails, find support, you identify support and reversal, and then you come back to said moving averages. Those are some of the best ones in the world to trade for me. Let's talk about other confirmations that algos run, okay? Algorithms, again, this is another older lesson for most of you guys, but these algo blips, this is another form of algo that we like to watch, okay? We just discussed this in the last video here, where we had this algorithm this morning. This is a ghost tail. Where does it come from? Don't know. Nobody knows. Everybody has theories on it, but most of these cannot be seen on time and sale. There are ghost orders. Some are black orders. Once in a great while, you can find it on the dark, but they're just random algorithmic orders. I have no answer for you. I just use them as we see fit, right? So pre-market and after hours creates these wicks. These algorithms, for some odd reason, define like confirmation. They're so helpful, and we use it with fibs only. So like I said, just because price action has magnets to moving averages, it has magnets to other levels as well. So once we hit a fib box, right? Let's talk about confirmation here. The price action, generally speaking, right away, especially on a 5-minute chart, will come down and hit the golden pocket. If you're confusing golden pocket, between the 100 and the zeros where we draw fibs, and in between the 38.20 and the 61.8 is a golden pocket, okay? So when we come into this small one right here, that's a large, delete this so we can see, you're going to see the golden pocket of that algo. So we drew a Fibonacci high-low. We pointed it to the upside because relatively we're looking for most likely a kill squeeze now after we had held support here at the algo. Price action dips down and then tries to attempt to get outside the box. The box is one of the most important things here, and the Fibonacci box is confirmation driven. So if it breaks out of the box, which is your 100, your top, it will generally come down to the support of that set box and then move to extension, right? Or in one move, either or, same thing. As long as you're broken over the 100, you're long. Any maintenance back test of that, you're double long, and it goes to the 1618. Anything else is just progression that it can go back up. But algorithms don't like open circuits, okay? So back to this algorithm right here. Generally, there's a high percentile chance where the golden pocket is at least tagged before anything else happens. 61.8 to 38.20 in between your 100 and 0, okay? They will come down and will hit GP as a confirmation point and then go, right? This one is really fast this morning. There's not like it gave you any confirmation, it just blew out of the gate and ran. But it did give you that confirmation in pre where it came down and hit the golden pocket. A lot of the time when an algo is created, to leave price action open and have 0 candles developed after the algo is insane. It does not happen. Rarely. I've seen one in the last almost 7 months. I think I wrote in my journal this the other day. So this fib box has little 1 minutes that go up and out and then start to fail inside. Well, where's it going? The golden pocket, right? And then it's going to pick a direction because the algorithms they had to close that circuit to the GP, high percentile chance, and then it will close the circuit completely at a different time. But right now, this thing, again, psychological catalyst is going to trump any amount of monkey technical analysis we can do. The hype, fear, and greed, of course, of November 5th, we're going to classify that as hype. We know that the market closing red would probably be close to non-existence after I think about it a little bit, doesn't really make a lot of sense. So to find that early support, we at least have a confirmation where this fib box had pushed into the GP, broke out, and then just rip ran, right? And then if you watched us live trade, we did a whole bunch of connecting points on there. So let's talk algorithms in a couple different ways here, because these I only use with Fibonacci's. Okay, so here's the top side algo. It's another example where we got one of these fancy ghost wicks with a small body, cannot be a full bar. What I'm going to do is point it to the downside. This is the one I was talking about, the one that I had just seen where there's no action in the fib box, okay? Fib box here, no price action came into GP before it dropped, which means we have a wide open algo with no price action inside. That is insane to me. It never, ever, ever happens. Obviously, anything happens in the market, but very rare. So what am I going to do with this data that has no algorithmic touch? What are we looking for? Well, we need to find the day where the magnet comes, right? Shoots its lightning bolts and pulls the price action into the golden pocket of this high-low Fibonacci. So let's extend this to the right and see how the extensions played out. I'm going to make this neon pink so we can find it nice and easy. All right, so when a cycle completes itself on the Fibonacci, it generally backtracks, okay? I'm going to put these on the left. All right, so these extensions you can see on the left. Nope, that was just the price. Okay, your percentage extensions are here. Now, again, algorithm was made, pointed downside, no action to the right side of algo, big old question mark, that's crazy. So when something comes down outside the fib box, they run extensions, okay? Fib box is created. It comes outside of the box. 1618, 2618, 4236. Once in a great while, we'll have 666 on a full extension, and that is just absolutely insane. 423.60 is generally the golden ticket where reversals happen. Okay, so let's look at this algo completing the circuit. All the way. And again, a really nice fib is 268. A really golden fib is 423.60, those extensions. Okay. So price action has completed the circuit all the way to 423.60. You have a high percent chance to bounce after 423.60 is hit. Don't care what it's doing unless you have a catalyst that's psychological that could drag this sucker down. Well, let's look at that 423.60 base right here. What did it do the next day? No. Okay. We hovered it and we never dropped lower. After something comes back up from the 4, it usually backtracks each fib. So 423.6 becomes support, moves to 2618, 2618 moves to 1618. So you see here, we opened above the 423.60, pushed into 2618, and then from here attempted the 1618. So we have not made it to 491.52 yet. So we keep looking at these fibs. Did we go any lower the next day than 423? Nope, held the 423 again. And here's the cook day that we received today, right? So let's delete these. These are, again, just from the downside algo that we do not have interaction with yet, right? Which is scary. Let's delete all these. We can only see the purple ones. 423.60 holds in its above. We got a algo this morning that we just covered. Now the 2618, look what happens in price action when it starts completing that circuit. Just by fibs alone, one section, 2618. What does that look like? Breaks over. Back test, what is that? Confirmation, right? Does the market always give you confirmation? Is it just going to break over level, perfectly take that level and go? No, of course not. We use general ranges, right? The market's here to just give you a tough day. That's all this thing is for. So when we see the break over the 2618 and run, where are we going to go next? The 1618, then we should have an interaction there because it's cycling back up. Okay, there we go right here. 1618. Ooh, top of the day. Now, what happened here? Extra confirmation. Let's talk about it real fast. Remember this pre-market algo. Extra confirmation. High, low. What do I got now? 2 algorithms damn near in the same exact spot telling me that we have pullback at 2618 area because I said actually to short here into the 10 SMA. So you have this 1618 top of the day before the fail, and then this telling you you're over hot. 2 different very large Fibonacci's working together to give you a range, because Fibonacci's are oh so confirmational, between these where the market was susceptible to failing. Why? Because we already had a mega run up. Nothing is allowed to go in a straight line forever. It has to get hit by what? An opposing force. Did we hit the 1618 in the last couple of days? Nope, just talked about it. Are we above the 618 moving towards the 1618? Yes, this is considered a first tag back to the upside. Okay. So 423.60 hit the 2618, back tested confirmation, hit the 1618, VWAP as we called, and off we go. Okay, so let's look where we ended here. Probably close to the 0, if not dead on. And there's the 100. This is the fib box where we don't have any data and we have a high percent chance to come back to the golden pocket. So we could see 495 being a target. On the last YouTube video we just made for recap, we're talking tomorrow into the next day, 493.85 will be tagged because that's a double gap on QQQ. But so the 1618 was broken over. Then what happened? Back test area of confirmation, right? Just because something breaks over a level means nothing. If you can be patient and wait till we back test said level and have a reset where you're limiting your risk with confirmation. What is a reset? What are we limiting our risk with? Are you buying a high of day? No, that's risky. That's silly, right? Silly goose stuff. We don't do that. Are you looking for a long because the overall macro trend is long? Absolutely. Trend is friend. So what do you do here for extra confirmation? Are you going to buy into the weak RSI come down to the 50? No, it's probably going to go lower, which it did. Are you going to buy into the bearish MAC cross? No. Your confirmation is to watch a price level mixed with a big old basket of apples of catalysts that you can stack together, right? So what are we catalyst stacking? Pulling back, finding beautiful support at VWAP, RSI getting higher low right here during the consolidation push, MACD looking really good with a big buyer wave beat out, small sell wave. So right around here is a great metric for watching long. So anything long here, you would utilize a hard open close on VWAP, adding confirmation to your trade, right? The oscillation indicators are telling you we're doing pretty decent here. Price action came down to VWAP. You could, again, watch for trend under VWAP to stop out on this one, but we said buy that dip into the VWAP today, and we're getting extra confirmation. So what are we supposed to do with the algo magnets that these things are going to come to? Well, let's look again at overlapping fibs. We have one fib. I'm going to extend to the right. I'm going to make this one white. The other one's pink, okay? Stay with me. Weekly is teal. This pre-market algo that we have just discussed many times with the box to the upside. Golden pocket, up, up, up. Where do the extensions go? 1618, 2618. Okay, 2618 here. What's next? 423.60. Where is the 423.60 on this pre-market algo? Because these computers are going to talk to each other. And if we got two computers saying the exact same thing, we have more conviction. What do we got? 423.60 from the pre-market algo we just talked about. 494.40, 423.60. What else is that? Oh, the 61.8 of the no tag algo from the downside we just covered. Lo and behold, the same exact to the penny algorithmic, which means what? We're obviously going to go back up there and test, right? So our two targets to the upside to drag price action up for continuation potentials before we pop and drop again from the gaps are untagged metrics like these algorithms in the Fibonacci. They're speaking to each other. They're like, okay, well, I hit the 1618 down here. Now I should go to the 100. After the 100, I should break inside, and I will go to uncharted territory of the golden pocket of the algo we were just talking about that was super downsided, that doesn't have any price action to the right of it in the early video. That's where it's going, right here, just sub 495. Okay. So 494.40 is going to be huge, and 493.85 is going to be huge for the remainder of the day. Extra confirmation, okay? So we're going to go into the last little piece of the pie here of extra confirmation. And we had a lot of 1 minute gaps, so I'm going to try to throw some algos in here. Now, getting extra confirmation and stacking your catalyst, I want you to pick a couple great indicators, maybe 4 or 5 tops, that you identify with very well, that you can read, that you pick up, that you understand, and just use those. Stop having with the 50. I have a couple moving averages. I have VWAP with extensions, and that's literally it. And I use fibs pretty much the whole rest of the day with oscillation indicators or down here, MACD and RSI. I don't have a whole lot on the chart besides what I draw for fibs, right? So during the Discord, right? And where do I have that say? Right here. I posted this picture, and these look different because they forever calculate onto the VWAP, right? And I brought this up and I said, well, I'm just trading in between ranges, limiting my risk, right? This is what we were doing this morning. So the algos, they tend to channel chop everything 50% above or below. That's why we use 50 and above the RSI, 50 and below. MACD, zero line, positive territory, negative territory. I use the VWAP extensions and channel. So if VWAP is 0, this is +2 in the orange, and the channel is between VWAP and +2. Look at that. Every single time it hits VWAP, it goes long. Every single time it runs into the extension, hey, I'm overpurchased, is the plus of VWAP, it comes back down. But there's extra confirmation. So how many apples can we shove in our basket to get as much confirmation as we can to trade this chop? 1 minute chart it is, especially for the early morning, nonsense days, because we have just, tons of different algos in gaps that we generally find here. And they have to happen in low volume. So this is not something that you can just do every single day on every single chart of every single time. The best of the best for this stuff here is to have a 1 minute up and pay attention to low volume gaps. So that picture that we were talking about in Discord, again here, VWAP's in the purple, +2 is in the orange. Every single time I see price action acting up to the 2, I know I'm at least at a limited risk to attempt a short, right? And I love higher high shorts that come back down for higher lows. So you're breaking over highs right here, so on and so forth. But let's look at algorithmic confirmation, mixed basket goods, right? So what do we have here? Well, there's a 1 minute gap. That's where no price action, just the background color is between 2 1 minute candles. Generally speaking, in the same day, high percentile chance, these will fill, okay? And it gives us predictable target ranges. So when something was on the uptrend right here, and there was a gap and go right here, there's a gap right there. It broke to the upside. Price action will come back down same day. And fill said gap, it broke to the upside. But what did it do? It created another gap to the top side after the low gap. So the low gap is created. It pushes. Huge push. You know it's going to come down eventually. What's your catalyst? Well, it has to get acted upon by an outside force. So just because you have a gap right here, you're going to short right away here, 1 point away, and then go for the short down to the gap. Well, no, that'd be silly. You're going to wait for that one big candle and that's it, push. No, not too much confirmation there. I would open up my oscillation indicators and I would go, well, now we're getting over hot on the RSI. Now we have backwards histogram after about 1:20 in the morning here. Now it's quite far away from that 1 minute gap and then poof, it creates this gap right here. I'm all in short. Boom. Now we have a chance to gap and go to this side, which it did, right? Then we have another gap here, same thing, pressed up, filled on the 1 minute chart. See the confirmation of trend here? When it leaves an open tag and then runs away from it, your best case scenario is to wait for it to hit something of support, right? So the 100 EMA chops a little bit here. We got that beautiful 200 bounce right here. Pops back up. Doesn't even fill this algo yet. Okay, no big deal. Goes for a lower low. What did we hit that was super reputable? 50 SMA daily, right? That's a 50 SMA daily coded into the 1 minute chart. So that little tick right there, that's a beauty, right? And then it pops back up. So even if you missed a trade going back, for like this long and it missed the target because you weren't taking profit like you're supposed to on the way up in 3/4 quarters, we still have this algo target open to find longs. And we need to find the extreme. Well, just like the hot was here for the RSI, the cool is here, the MACD is here, the 50 SMA daily is here, the lower low, which lower lows a lot of the time break back to the high trends, right? And then you see a higher high reversal, so on and so forth. Look at all those confirmations. So what are we're going to push. And now, even if you weren't confident in buying lows into a beautiful support like the 50, look at the extra confirmation this gives you in the algos. Consolidation, but look at the convergence here, all working together, pushing that price action up. So even if you had to wait till that secondary pop, and then you found your love there, and we just got done talking about moving averages, broke under the 100 EMA and the 200, snap back over, confirm, and off she went. What's your target? The gap that was open. So moving averages telling the story here, like always, and VWAP as well. VWAP was huge here. And like I said, things love to do higher highs to reverse lows, lower lows to reverse back to highs. Just like this scenario here where we had a nice little base forming, it had to come down, set lower lows. That's what the algos do to stop you out. They know where your order's at, and especially if you have the high day and you're one of those silly willies that put your stop out right at high day, even silliness. You need full hard open closes. So again, here, notice we have a 1 up, 2 up, 3 up, because algorithms love threes. Higher high for the day, and right back down. And where did it go? +2 to 0 WAP. Okay. So a lot of the times the confirmation of these algos, they're speaking to us saying, hey man, we really need to fill this up. What can you do for us? Well, I'm not going to be able to do anything for you until the oscillation indicators are all working together. So we're going to wait till something goes cold on the oscillation indicators, MACD, whatever it happens to be. And then we're going to go, hey, now we're ready to help you out, right? So you can't trade any of these chop actions. You really need to wait till that outside force. The confirmation becomes the extreme. So a cool RSI, cool MAC, looking for that reversal, puts in a strong buy wave, 230, so on and so forth, pushes. And each one of these gaps are opposite action. This gap up on the 1 minute runs away, sets a higher high, and then reverses. And where's your target? Right here. Okay. And we miss a lot of the ending chunks in there because we'll short here because it's, again, limited risk shorting. Where's my target? Well, from the +2 VWAP, right here on the gap. And then, yeah, went a little bit further, but does not matter to me. Another higher low, right? So this whole big trend with all these fancy gaps are extra confirmation for our basket of goods. There's another little example right here where we come up to the +2, we start failing. It creates a gap right here of price action. It runs down, waits for an opposing force that is larger than nonsense. So this is all BS trend, right? And it comes down into the VWAP and then the 666. That's something that that's tangible, right? 57.49 yesterday's close. VWAP right here, 666. Now we have an outside opposing force. We have tons of supports. We have the RSI working for us. We got the MACD working for us. And where's our target? Well, we can buy into limited risk confirmation zones like we see here, where confirmation in the RSI, the MACD, the pattern trend, and backtesting major support are all working for us in a bullish scenario. Where is our target? An unfilled gap. What did it do again? It scammed everybody, push, 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 and out, right? So you see me a lot of the time protecting my trades all the time, right? And this was the little scary part about it. So if I'm in at the support limited risk here, I'm, 5 to 7 contracts, and maybe ES, maybe 10, and it'll come out and I'll get rid of 5 or 6 right there. And then if it is another push towards that gap, I'm out of pretty much everything besides 1 or 2. I'm covered out by 80, 90% of my trade, because this happens a lot, right? Because the market is not set up to help you out. So the 100 EMA and 200 stuffs it, double top stuffs it again. But the key was this gap right here on the low side, right? Look at that thing. Sneaky. So we've seen it press back up, and then now it's your decision as a trader, your job to go, okay, well, my trade could consist of going long to this gap or short to this gap. Which one's going to work the best? Well, we had already moved, and again, here's where those 3 ups come in for the algos. 1 push, 2 push, 3 push. 1, 2, 3 attempt. Do we have another attempt? And then is it plausible to think that we can do another push after a potential, 3 set? Sure, it can happen. But is it already better to long the limited risk, because we knew where we were longing? We're out of 80% and 90% of the trade, comes down to here, and then we're out of everything, and then it starts to tumble and we can close out. But we wouldn't have really lost that much money. Why? Because the gap was made way back here. Your eyeball should have picked that up. So if you were looking for the longer here, it starts to lower high double top. You see the RSI lower high, and you have seen the MACD giving you confirmation from 702 to 709 saying buyers are stepping away from the MACD. The histogram here is going backsided. Would you stay in a hope for another push to close out your 1 point algo, or would you go, yeah, it's better to just get out short, or get out and then relong the gap, because we are going to come back and test it way later, which we did after we filled this little demon, right? So that's why we're using those algo confirmation gaps key over and over and over again, right? And then again, we magneted back down, or back up, I should say, to that 10 SMA. And those are all really big pieces to confirmation and algorithms, right? They create magnets on moving averages. It's all about the psychology of the day. We have algorithm pre, so on and so forth. We got all these things that move together in big baskets, right? So with that being said, I hope that makes a little bit more sense. Ask as many questions as you can. I'll re-explain this in a completely different style video. I have no problem doing that. Make a bunch of shorts on a bunch of little stuff coming up here soon. So please hit me up.